Everybody, it's Brian. Hope you're doing well today. It is Wednesday, the 8th of July. I started to space on the day again. Did that yesterday. It's weird. Anyway, 8th of July here for just a quick update in the markets and maybe some trade ideas, things that we're looking at for the day. Let's go ahead. We're gonna go through it pretty quick. I guess before I do that, just a quick update. I mentioned, I don't know, a week and a half ago or so that I'm gonna change this page over to this Facebook, I don't know, I guess just an open page over to a group. And I need to get that done. It needs to be done sooner than later, mainly because I'm working on a couple of things. I've got two projects that are probably going to come together at the same time. And those projects are paid projects. And at some point, I'm still going to give information away for free here. I committed to doing it. It's what I want to do. I want to be able to help people. But at some point, it's going to start conflicting with the stuff that are these paid projects. So I need to put this behind something where I can limit random access to it and keep it into a group of people that are engaged and actually want the information that I'm providing, right? And so I need to switch it over to a group. My goal is to have that done by the end of the week. So be prepared for that. I think most of you that are watching from here and pop in from time to time are on an email list. So I'll send an email out as well to see if you guys can join that group once I get it created and ready to go. The group will be probably a little more active. I definitely would like folks to participate in there and give trade ideas and things that they're looking at as well. But ultimately, the reason behind it is just because I don't want my information that I'm doing every day, putting out for free, to start conflicting with the paid programs that are going to be out there in probably next month and a half. So anyway, just so you're aware, the free stuff's not going away. I'm going to give you everything I've done and continue to do, and I'll continue to do that. But I just have to do it in a way that doesn't hurt partners. So anyway, with that said, what's going on for the day? No high impact news. We do have crude oil inventories coming up at around 9:30. So that could certainly be impactful to crude. Could be impactful elsewhere. Bond auction isn't really going to be, well, I shouldn't say typically isn't highly impactful for us. So really not a whole lot that we have to worry about this morning as far as news opportunities that are occurring there. Over here on the forex side of things, I'm just looking at what we might be able to trade this morning. Leading things off, we do have some divergence between the pound and the CAD, pound and the Aussie. So a couple of things maybe against the pound that we could be looking at this morning as potential trade opportunities. Pound Aussie, looking short pound versus the Aussie. It's moved 71 pips for the day, averages anywhere from 140 to 170. So there's a lot left there. Pound CAD, which probably is a little better considering these markets are both open. It's only moved 66 pips, averages about 130, and it's actually just breaking through. I'm going to go ahead and sell order on that one. So I'm going to take the pound versus the CAD on this one, just looking everything else, mainly ranges here on it, and see if that can continue on down. And if this divergence continues, it should push us into a little bit of profit. We'll see if that momentum can continue. So anyway, I like the pound versus the CAD. Other things to look at would be the would be the yen versus the Canadian, or the CAD yen is what it would be. It's actually got a really low range for the day. We look at the CAD versus the yen. It's only moved 30 pips, averages about 60 to 70. So again, another one there that's got some potential opportunity on it would be that CAD versus the yen. Looking for the CAD to continue to strengthen, yen to continue to weaken. Crude could be kind of a driver with the CAD. We'll see. But there's another fact. I'm going to go ahead and I'll park that one there as well. I'll park that order. Look at buying CAD on that one and see if we get some opportunity there as well. So I'm going to place an order at the top of that box as well. So there's a couple of trades that looking like they've got some potential for us. both kind of hinging on the CAD continuing to push to strength here against our other currencies. So we'll see where those go. A couple trading opportunities there with the CAD versus pound and CAD versus the yen. So we'll see how that shakes out. Over in the future side of things, over here, this one. Over here in the future side of things, we've got a mixed bias between the 4-hour and the 30-minute. This kind of fell off yesterday, broke through a key level, which was that 31.55. Broke through that yesterday and has continued to push on down just a bit. It is finding support. We're finding buyers down here at 31.25. So it did hit that next level down and repelled off of it. We're kind of here in the middle right now, although this 31.40, if we look just here on the shorter term, has also been a fairly key level as well. So we'll see what happens around here. But the main levels I'm looking at, 31.55, 31.25, both have been pretty well respected. So we'll see what occurs for the day, and if there's anything that can be thrown at the market to cause it to rally some more, we'll see. Who knows? Certainly is. I would have expected a fall by now. I really would have expected this market to start dropping again. I'm really surprised that it continues to push as high as it has. But ultimately, we have pulled back a little bit. Long and short of this is we're in a conflicting bias here. So our 4-hour and our 30-minute are conflicting. So that tells us, sit on our hands, don't do anything, let's not worry about it. We'll see what happens if this continues to push up and crosses back over and does it during a time that we're actually actively trading still. That might be some opportunities for us to go long, but right now it's a conflicting bias, which tells us that we're just let's just hold off and wait and see what comes of this later on. Over on crude, we have a confirmed bias long. So the 4-hour is long, the 30-minute is long. Remember though, we do have crude oil inventory coming up here at 9:30. If that could potentially be a driver for us. We definitely are seeing a top established up here at this 40.80 area. So we're seeing a top level up here. So if we're looking for a breakout, we could look for a long. If it breaks above this 40.80, we could look to take it long from there, see if that continues on. Other way to play it would be to watch for pullbacks to key areas. So this 40.60, 40.40 would be areas to look for pullbacks, and really 40.60 would probably be the best because it's not. We've seen this kind of on an intraday basis on a 30-minute. We've seen this area here as resistance. It finally broke it, so we would expect to see this as support. Maybe even a little further down if we wanted to get down here, bottom edge of this around 40.50. So somewhere between 40.60 and 40.50 for a potential buy off of a pullback. So a couple ways to look at that would be the breakout or a pullback. You could also watch it using the very simple method that we talk about here for the small account challenge, which is just simply using waiting to see if we can make some lower highs and lower lows, and as we make lower highs and lower lows, wait for that to pull back, and then time our long entry off of that top of the previously closed lower high, and see if we can find that breakout that way. So a little combination of both the pullback and the breakout, but still going in the direction of that established trend that we're looking for here, which is the long bias. So this is still long on crude, so we'll see how long that continues. Gold, oops, what happened here? Gold is in an upward bias. So gold cracked 1800 yesterday prior to us beginning the day, I believe. Yeah, I was right at it. Made a run above 1800 yesterday, and it's continuing higher. So gold, we're looking as a long bias here again. So we'll see if that can continue on. Obviously, we'd want to see if we can buy it a little bit cheaper. So if we can pull back to this 1810 or even back to 1805, those would be great spots to look at for pullbacks. As far as breakouts, we're already pretty darn high here. I really would probably prefer a pullback to a breakout on gold at this point. I like to see it get a little bit cheaper before we can take it longer again. But trading ideas for gold would be to wait and see if it pulls back to this 1810 or even as far back as 1805, and then go long off of there. So that's it for those. Ultimately, with any of these, with any trade, I say it all the time, but just to reiterate it, we always have to be prepared to be wrong. So always trade with a stop loss, limit your risk, and allow those trades the opportunity to, when not if, when they move against you, to get you out of that trade and find another better entry either later in the day or on another day. You don't have to constantly push the button. And it's a good reminder. It's a good thing to always keep in the back of your mind. And that's where most of us fall down, is when we start over trading, start trying to quote get it back, and that's the bane of any strategy. There is you start deviating from the strategy, you start over trading. If you have that loss, and if we're not comfortable taking that loss and moving on and waiting for the next setup, instead we're trying to quote get it back, those become days where we over trade and can do a lot of harm to our accounts. Last thing, talk about here. I don't have crypto up. Crypto has made a run to the stronger side. I don't have it up. What I've got right now on my trading view screen is I'm trying to watch and see how this script is working, which actually is looking pretty good. It's doing what it's supposed to do. The drawdown here, you can't limit days that we wouldn't have traded. This is counting in July 2nd for non-farm payroll, which during the time of day that we'd be trading this, we wouldn't have traded. It's counting in July 3rd, which we wouldn't have traded because it was a holiday. So it's taking into account some days where we wouldn't have traded here. It's taken, obviously there's days where we had FOMC news and things of that nature. So, I have to kind of, and we can't go back very far here on TradingView. So it's only taken me back to the beginning of May. So anyway, still kind of working through, but setting the parameters. It's basically setting the parameters on in order to automate. It's not really automate. It's not going to auto trade for you, but to automate the trade signals based on the process that we talk about in the for the small account challenge, and it just works with anything. It's taking that trade method of looking for the lower highs and lower lows during a specific time of day, and then allowing us to make our trade entries as we see those events happening. Of course, like I've said before, anytime you backtest anything, it's never going to show you accurate results for a number of reasons, and largely because there's typically it's going to include data for days that you would not trade. I mean, reasonably, we know we're not going to trade in the face of high impact news, and if but this can't, obviously backtest can't filter that out. So you have to really more or less forward test it for a while to see that it's doing what you would expect it to do. But looking through the data, I mean, it is capturing the trading opportunities at the times that we would take those trades. It's just we have to factor out the days in which we wouldn't have traded because of high impact news, testimonies from Mr. Powell, and so on and so forth. So anyway, but it's coming along pretty well. It looks like it's doing what it's supposed to do. The cool thing just to know that it is working, and it's working properly with no quote like that's the other thing with strategies. Anytime you look at a strategy somebody puts out there, strategy XYZ that's got all these crazy moving parts to it, they always form fit those strategies to a specific I shouldn't say currency, but to a specific instrument. So like this is a strategy that works on the blank, but it doesn't work on something else, and that's always suspect to me. The cool thing with talking about the simple strategy that we utilize here, if we look at it on the ES, it works. If we look at it on gold, it works. If we look at it on crude, it works. If we look at it on on the Dow, it works. it's not something that's like customized and form fitting. It's just a simple strategy that actually works. That's what it comes down to. So anyway, I'm going off on a long tangent, but I want to test this a little bit more, make sure that it's giving me the signals that I would expect at the times that I would expect, and it's doing what it should be doing. And once it is, I will put this out and put it online, and you guys can have it to work with for a little while. I am going to lock it so you can't take the script. I'll probably make it an invite-only script actually, just so that it can't be widely distributed, because this will be the backbone of something else that I'm doing with another project, and obviously I can't just have it floating around internet land with no restrictions or locks. So, but those of you that have access to me and have access to this page and this eventually this group, I'm an open book, guys. I have nothing to hide. You know, I'm doing all this because I want to see my friends, my family, their friends and family succeed. And, you know, I'm happy to give you the stuff that I create. So anyway, there you have it. That's it for now. I'm going to leave it with where we are, and we'll see what the day brings. Man, you know, the market's really been mixed up here, you know, coming back over to futures. We are in a mixed bag, mixed bias on the S&P, which means when you're looking at the Dow, it's going to be a mixed bias as well. NASDAQ is still above, you know, well above like 10.5, but man, you know, my personal bias, I feel like, you know, we're on that precipice, on kind of that tipping point, and we may see things break shorter. But of course, you know, we can't trade on our personal bias. We need to trade on something that's quantifiable. So, you know, trade with the charts are telling you, and if they're telling you to relax and that things are mixed up, take it as a hint to just step back and allow things to be mixed up, and then wait and trade in the direction that things actually start moving again once we find a trend. All right, because we're always going to have our best times when we can trade with a trend. All right, so that's it. Have a great day, and we'll talk to you soon. Bye.